Hey guys, there's a lot going on out there at the moment, both domestically and overseas. Let's start in New Zealand. The best one-year rate we're seeing at the moment is 4.89%. That's a good rate. We're expecting to see short-term rates drop a little bit lower with the OCR, but it'd be fair to say there's not much more to go. So I would expect to see mortgage rates bottoming out at around 4.5%. I'm still expecting to see the OCR go down to 2.75%. I'm very conscious that the Reserve Bank's still talking the bottom of it at 3%, and we're nearly there, right? Because the OCR today is 3.25. Longer term rates are much more driven by what's happening overseas, and there's a lot more risk overseas. So we're seeing 2 and 3 year mortgage rates below 5%. That's largely driven by bank competition because wholesale interest rates have actually been going up a little bit. And again, that's driven by overseas. So what's going on? Well, we've got the potential for a war in the Middle East, obviously between Iran and Israel. We've got sort of the continuation of the war that's occurring between Russia and Ukraine. We've got conflict occurring between India and Pakistan, albeit it's a lot more muted. And then, of course, we've got the ongoing political toing and froing going on between China and Taiwan, and the prospect of a Chinese reunification being signaled in the next couple of years. This is all creating a lot of geopolitical instability. We've seen oil prices go up, that's inflationary. We've seen the tariffs in the US, that's inflationary. We've seen this theme of deglobalization, which is inflationary. And that's why US interest rates are quite high at the moment. US Treasuries, I think, are sitting around 4.7%, and that is high. There's another factor there as well, which sort of relates to all of this, and it's the changing weight of power across the globe from the US to Asia. And how that's playing out at the moment is that the US has been running deficits. We thought Trump was going to get that under control. That was the whole Elon Musk agenda. That's obviously not occurring. Trump's very good at spending money. The US is very good at running deficits. It runs massive deficits. We've got a massive wall of US Treasuries maturing this year, about $7 trillion worth. Now, the interesting dynamic with this is that historically, China has been a very big buyer of US Treasuries, but with everything that's playing out at the moment, I don't think the US can rely on China buying Treasuries. That means you're potentially going to see an even bigger spike in US interest rates because of the US's inability to refinance its debt. Now, God knows how that plays out, but I would sort of expect it to be putting upward pressure on interest rates, which is consistent with a lot of the other things that we've been talking about. And that's why if you're worried about interest rates, you want to fix longer term, then definitely get into that opportunity now. Coming back to our domestic market, what about the housing market? Well, that's largely going to be driven by the New Zealand economy. And I think at the moment we've got almost a 3-speed economy. The South Island, you could almost think it's part of Australia. I know they wouldn't want that, but it's strong down there. The confidence levels are high, housing market's still strong, construction's still strong. They're also getting good agricultural prices coming through. That's flowing through into the rural economy as well. It's really just Auckland and Wellington now that are struggling to kick themselves out of the doldrums. So, and that's not going to turn around anytime soon, right? You can knife your consumer. It takes them a while to recover. And that's fundamentally what's happened in Auckland. Wellington is a little bit broader than that, and that there's been massive restructure of the state sector, and obviously there's been a lot of job cutting in Wellington, and that's certainly impacted on that economy. So when I think about the housing market, it's not really one amorphous beast. The South Island seems to be kicking along quite nicely, relatively stable. Wellington's still struggling. Auckland feels like it's coming back to life, but it's very slow, and I'd expect to see it stay that way for the next 18 months or so. I'm not really expecting to see Auckland take off again until we've got job creation, which will come off the back of higher levels of consumer confidence, higher levels of business confidence, and net migration into the country.